how that would imply with a Turo car as far as things you might want to consider as far as an option is concerned. So if your intent of getting into Turo and you want to get into debt to get that one car to get going, that might be a viable option for you. The dilemma is that you're brand new to Turo and you have no ratings, and there's very little draw for you unless you're in a large center. So that's one thing you might want to think about before you do that. Now, at the same time, if you're going to finance a car anyways, because you need a car to get to and from work, or you're using it as a secondary vehicle, whole host of personal reasons, right? So we're not going to really get into that, but I'm going to say that to finance a car exclusively for Turo, I would probably hesitate a fair bit just from that standpoint, especially if you're brand new. Now, if you're a seasoned person out there on Turo, you've got 3 years under your belt, you kind of go, no, I have a predictable income, moving up a scale or two, or having additional available vehicles might work well for you because you've already developed a client base or a core, then maybe it's something to review. So let's talk about some options out there. So if you're brand new in the marketplace and you haven't established credit anywhere, you're going to be paying a fairly substantial interest rate. And that can range depending on the type of dealer that you go to. Now, traditionally, you're going to finance through a dealer. You can go to your individual bank, and there are ways of working it to be able to say, okay, I want to get this particular vehicle. There's a process to go through it. The easiest way is actually to go through a dealer. Plus, you've got the security of, in Ontario, new arrival, the OMVEC, which is Ontario Motor Vehicle Council, kind of covers a couple things to help protect you in the event that, let's say, you finance a car and it turns out to have a host of issues that you find out 6 months later, like the car is a salvage piece or stolen or a host of items. So if you're going to go and finance a vehicle, it's best that you actually go through a dealer. Now, there's lots of dealers out there, so you can kind of pick and choose from that standpoint. And buying from the appropriate dealer is almost as important as buying the appropriate car. So OMVEC does have ratings, so it's always a good idea before you actually go visit the dealer, put the dealership name in OMVEC search engine that they've got there, find out if they've got any concerns as far as people registering complaints. And if you get into a dealership and you look and kind of go, geez, these guys are just filled with um, claims and issues through OMVEC, well, then you can kind of go, well, maybe I should go look at another dealership, right? There's always other cars out there. The other one, that if you're going to go to an experienced dealer and they're going to be able to tailor your finance needs to the lender. So in other words, what I'm saying is that you might walk into an experienced finance office and they might go, oh, based on your income level, your years of experience, your credit rating, your history that you're telling them up front, they may say, hey, good news, you're a Scotia or a CIBC, or you're a main lender, like you're going to go to a full-fledged bank. And their interest rates might be very reasonable. They could be anywhere between that 5% mark all the way up to 12%, somewhere around that range for a used car that's 3 to 5 years old. So there's going to be a cutoff as far as that's concerned. So that's important, that the dealer can actually tailor your package to your car so it fits appropriately, so you're not shopping your credit all over the place. You want to make that clear when you sit down with a finance manager or someone who's going to represent you, that you don't want to send 8 million inquiries on a car that probably isn't obtainable for you. So just find that comfort zone as far as that's concerned. And again, that's where reviews really work out really well. So if they come back and they say, hey, good news, you're going to go through a CIBC, or you're going to go to a bank, you're going to be a traditional lender. Some out there do deal with sub financing, and their rates will reflect that. So I always like to take that package and shop it. So in other words, if they've gone ahead and they've said, okay, we've got you through Scotia, then I would actually, if you were a Scotia Bank client, I would go in and say, look, this is the deal I'm working on. Is this a legitimate package? Like, is this, because they have a dealer arm, they're going to contact them through the branch anyways. They're going to say, okay, yeah, there's, that's the appropriate number, and that's the appropriate interest to charge out on that vehicle. A lot of times when you're at the desk or you're at the teller or you're in with one of the managers, they're going to say, hey, well, you know what, the way they've structured it, or maybe there's some items in there that you don't particularly need, they might be able to save you a little bit of money. You can go back to the dealer and say, hey, look, I want to restructure the deal this way. You can still keep the deal with the dealer. It's not a big issue from that standpoint. Or you can go and say, okay, I'm going to port this or move this to my actual local branch. Today, that doesn't happen that much. Most branches don't hold their loans, so they would go to a dealer arm anyways, or they would go to the dealer division, and that's how that would work. So it's just the nature of it as far as that's concerned. But it's a good way of just comparing and saying, okay, are these notes correct? Especially if you're not experienced, and be able to just double check and say, okay, that's where we're at. Now, traditionally, when you're getting into something along that line, you're going to be stuck around that 60 month. And I would probably recommend with Turo, a 60-month on a used car probably isn't a great idea. You're probably going to want to be around 48, which means that your payment's going to be a little higher. But you want to be able to have that ability to have that rate of depreciation taken care of relatively quickly, because you're going to want to rotate the car out. Because if you're going to go through Turo, if you're successful and you've got lots of kilometers on it because you booked it a bazillion times, that car is going to get a lot of wear and tear, to the point where there'll be negative equity within the first year or the second year. You want to be able to pay that down quicker, right? So trying to do it into a 48 would be the best ideal, which of course means where you're going to sit financially. Are you buying a $50,000 car? The payment's going to be pretty expensive. So again, that's something you need to review with the person that you're talking to. Again, it's not a bad idea to go to your local bank and say, hey, what do I need to budget for? Right. And that would be your traditional lender. So nice thing with that, you have the option of buying out early. So if you have success and you go, okay, I want to not only buy it down with the extra money I've made off Turo and pay the insurance and do this and so forth, it's a viable option as far as that's concerned. The dilemma is on the contract, what is required to secure that loan? And that's something where you have to talk to the lender and say, look, I'm planning to put this out on Turo. Is this going to be an issue? And it's a good thing to get that out of the way. Some lenders are going to be very hesitant, or they're going to say, hey, look, we need to verify that insurance is covered completely on it. And they want to verify that the Turo coverage is going to be covered completely as well. It becomes a struggling point, especially on a high risk loan. So that's where some of the subfinanciers may say, hey, we need more security down onto a car to make sure that if there's a problem, that the deductible will be taken care of. The other one is a gap policy, which a lot of dealerships don't talk to you about, or even lenders. A gap policy on the loan that you're taking covers you in the event of an accident. It'll take care of that lost equity. It'll take care of that processing fee or charge to get you out of the loan, and also take care of some of the taxes. So getting a little gap protection is not a bad idea. Some insurance companies offer it as well. So again, something to review. And that's one of those things that if I were doing a traditional loan, match gap onto it. The other one is they may offer you an extended warranty or a few other packages on the vehicle that may be worth looking at. But the other one is you need to check the fine print, because you might find that contract might be void if you're running the vehicle out on a rental platform or on Turo. So if they come back and you said, okay, well, I spent $2,300 or $3,000 to get an extended warranty that keeps me covered, which is a great idea if you're running a little business. You kind of go, okay, well, it's built into the payment. I can kind of transmission go, so I'm not scrambling for something, right? Again, it's probably a wise thing to look into, but it's one of those things that if you go and say, okay, well, I've tried to process this, and they've come back as a company and they've found out that you're renting the car out and it's now considered a business, not personal use, and that's going to be something that might get the whole thing voided right up together, which case not only did you spend out the $3,000 that you're probably not going to get back, like realistically, or that cost to put the warranty together, you're going to pay for the repairs, and you're going to be probably saddled at the shop where they have it disassembled. So you're going to have some real hurdles to go through as far as that's concerned. So again, extended warranty is something to look at, but again, you want to make sure that you're covered for business applications. And there are warranty companies out there that will deal with you on that one. So it's one of those things where it's just tailoring the package appropriately. So that's kind of your standard process as far as that's concerned. Now there's a payment calculator you can get through like Scotiabank or Royal Bank will have it. And you can put in the amount of the vehicle, and then you can put in the taxes and the interest rate. And then they'll throw out a payment for you that you're not tied to, and they're not tied to it either. It's just a calculator. And it's not a bad idea to go through a few of those and say, okay, well, I'm spending 15,000, so it's going to be, or I'm going to spend X amount, or 60, this is roughly the number, right? So if you're, well, why is that double, or why is there a 30% change? have added a few things in there that you need to review and say, hey, well, hold on a second. Why are we at 13% where my credit is good? I should be at 9 or I should be at 6 on a car loan, right? So it's one of those things you want to review with it from there. So that's your standard car loan, and it's one of those things where if I were looking at a vehicle for transportation, I was going to budget for it anyways, and I wanted to put it on Turo. Those are the things that I would want to review. Not the ideal situation, but it's one of those things where if you feel comfortable with it, you might want to review that. Subfinancing. Now, subfinancing is one of those things where it's all over the board in the marketplace. It can be, we had to put a boomerang system in your car, a tracking system. It's almost a pay-as-you-go kind of thing. It could be almost structured like a lease, where the actual vehicle doesn't really change name on ownership until you pay for it. So it can be all over the place as far as that's concerned. But subfinancing is the next kind of layer of that onion that you'd get into. Subfinancing expect to be in that 18 to 28% range. There may even be usury fees attached to it, kind of hidden within it. It could be private funding as well, like within the dealership itself. So that's where you really have to read the contract. Really, really, really read that contract. If you don't understand the contract, it's not a bad idea to go online and find a paralegal. You don't need to hire a lawyer. You could if you want to, but paralegal is going to be very reasonable and be cheaper than going to a lawyer. Now, having them review the contract, and if they come back and they say, hey, look, based on what you want to do, here's section whatever that's in there that excludes you from being able to do Turo under this particular program, you might come back and say, hey, you know what, you're locked in. You're not going to be able to get out of that loan early. And most subfinance companies won't allow you to do that. They want the full amount with interest paid because that's their business. Like that's what they do, right? You can't harp them for that. They're really taking care of a marketplace that's high risk. So it's one of those things where sometimes you're at a point where you've either got little or no credit history, or you're going to have an issue with maybe you have some late payments here and there. Maybe you've had some problems in the past. Maybe you haven't had enough time on the job to be able to necessitate being able to get a premium rate through a regular bank. They're usually going to want to get some form of a deposit or some form of a down payment. They're usually shooting to get the taxes covered up front. They're also usually shooting to get the profit margin or the markup that the dealership would have had in that car. So they're trying to really get you down to that financing, that wholesale number. And that makes them a little more comfortable. So if you walk in and you say, okay, I've got $5,000 set aside, the car is 15, I'm still going to be at a high interest rate, but they're going to be more receptive to that because they're going to look at the level of risk is going to be less. If they have to take the car back, they're probably going to be able to cash out okay on that. You're still liable for the difference. So it's one of those things where it's a good idea to put a substantial amount of money down on something along that line, not just because the interest rate is crazy, but because you want to get out of it earlier and you want to be able to secure that loan. So that's kind of the view on that one. The other one is equity in the car that you've been trading in. And again, you may have an older 5-year-old or a 7-year-old car. And you just want to upgrade to be able to say, hey, I can now get a little more money through Turo for it. I can offset it, buy a nicer car, right? So subfinancing is definitely something to think about. I wouldn't consider it a viable item with Turo, mainly because the cost. You have a depreciating asset. Now you're getting charged an extremely high interest rate. You're locked in. So it's going to be a problem getting out of that vehicle if you have to rotate. In other words, if you find out that, hey, that vehicle is no longer supported through Turo, which you have no control over. It's a business out of your realm, right? So they might come back like they've done, I think, with there was a couple exotic cars that they pulled. They haven't pulled anything that's kind of like mainstream, but I think it was a Maserati. I think they pulled, and they said you can't put a Maserati on. At least I've seen some YouTube videos on that one, where they're very restricted, right? So if you had financed a Maserati, you thought to yourself, okay, a year ago, that's a great idea, good value, depreciated well. Maybe you got a great interest rate through a dealer, and you're doing it kind of through a program. You kind of go, oh dear, now I can't rent the car out anymore. Now you got to play catch up and kind of go, well, now I've got this asset that is probably depreciated. I've locked into an interest rate. I've got to pay that out. It's a bit of a headache. So something to think about as far as that's concerned is look at the vehicle you're buying and the odds that it might could potentially get pulled. So that's one of those things you need to be aware of. The other one that's out there is going to your bank and doing a line of credit. And the line of credit one is probably the freest way to go. So if you're well established and you've got yourself a good setup and you're comfortable and you can get a line of credit on a car, you're going to pay a little bit above interest rate. It is what it is. It's probably a floating variable. It means that you can sell that car, pay off the debt. It's not really locked to the vehicle itself. So in other words, the vehicle's not the asset they've tied it to. Sometimes it's going to be tied to um, property ownership or just a good credit rating, right? So one of those things, probably not a bad option because you can rotate out. The dilemma with a line of credit is there's going to be a cap on it, and there's going to be some limitations based on you, right? As far as that's concerned. And again, lower interest rate than going to a sub, definitely lower interest rate than getting into an automotive loan. So that's something to think about from that standpoint. The other one out there to think about is doing the Visa and MasterCard charge, which a lot of folks have expressed that they've done that for Turo cars in the States. And they take advantage of either a 90-day window of opportunity where you're not getting charged interest. The dilemma with that is it's one of those snowball effects, right? So not only are you going to have a depreciating asset, but now you're having credit card fees. You're going to have a very high interest rate, much higher than you'd have on a car loan or even on a sub finance. And it's going to be a very, very difficult item to clear because the interest is compounding on a regular basis. It's got that lazy aspect to it where you don't need to make a full payment. You can make a minimum payment. Next thing you know, you're going to go, you do that 6 or 7 times. That car's going to be upside down real quick, right? So a credit card to get you going, probably not a great idea. Now, a credit card to use for floating repairs and tires and things along that line, probably okay. Like I would probably think something along that line to help keep your book straight and to balance out expenses, to be able to go ahead and say, okay, I could put Michelin tires on a credit card, maybe get some points and a discount or something along that line. Kind of on a case by case basis, probably not a bad idea. So operating costs, like the smaller end of it, I would probably think about a credit card from that standpoint. But a full car purchase, probably not great financial advice from that standpoint. Now, leasing. So I'm familiar with the leasing deal, done that many times. Again, at one point I was in the automotive field and had a small little dealership, and I did leasing. So I actually had a small little book of cars that were out there that I had personally leased out to vehicles. We're going back 10, 15 years ago, like a long time ago, right? And it's a way where most independent dealerships will have a buy here or pay here program. Now it's going to be on a case by case basis, but they're usually pretty easy to work with. So if you go in and you say, look, guys, I want to buy that vehicle, and I understand the interest rate's going to be high, and I understand I'm going to be locked in, but that's the only way I can get into this business is to go through a leasing program, because either you're got citizenship issues, you got work issues, maybe you've got creditor problems, a host of other things. Usually there's a reason why you get into an in-house or a private lease. Again, that's personal hurdles, something you'd have to discuss and probably talk to somebody who's in finance and go, okay, well, what would we do? But it is the easiest way to get into a car. If you're in Toronto or Montreal, or you're in a big center, there's going to be quite a few dealers that will offer that. In fact, some of them will even be franchise dealers. So sometimes you can actually get into a buy here, pay here lease program on almost a near new car. The dilemma, of course, is, again, rates are going to be hidden within that leasing program, and expect them to be very high, and expect fees to be fairly prevalent. So you're going to find that it's going to be there. They may mandate you have to have a tracker in the vehicle, and they may also want to have verification, or they might want to get a confirmation of your Turo deal and kind of confirm that the insurance is covered while the other person is driving it. Like that would be the key thing to that one, so you've got yourself covered. Again, not the best way to go, but it's one of those things where maybe you're limited. Maybe you've been running cash cars for a year or two, and you kind of go, I'd like to have one nice car. it's tempting when you're in a larger center. To the most part, I personally think the idea of having a car that's essentially a personal financed item where you've said, okay, I've set aside the money. Maybe it took you a year or two to get that together. And maybe you had to buy a lower end vehicle to get into Turo. Like I'm not saying a beater or something horribly rough. Maybe you have to be in that 8 to 6 year range, and maybe you've got a little more kilometers on it. Maybe the car isn't pristine, but it's nice. It meets Turo requirements. That might be the one to go with and say, okay, well, that and kind of just build up equity in that car by paying it off. It's your money, but be able to pay that down to zero as quick as possible. Then you can sell that if you bought it right. You can move that money and kind of upgrade the next one with the money you made off it. Then you kind of build and move to the next one and so forth and so forth. Um, there's a lot of YouTube videos out there about cash cars, and it's kind of the one that I would probably lean towards if you're just getting into Turo. Don't take a huge gamble. Just say, okay, I've got the vehicle anyways. That always works out well. When you go, I've got a second vehicle in the family, or maybe you kind of go, lifestyle has changed. Maybe you're no longer commuting back and forth. Maybe your job has changed, and it's pretty big. Maybe you're not doing the 25,000 kilometers a year you used to. Maybe you're only doing 5,000. You think, okay, I can get it out of the way for a little while. So that's one of those things where it's a personal choice from that standpoint. I try to keep these videos around 30 minutes, and I try to do topics when someone kind of sends me a little chat or says, hey, I'm in Turo too. Um, what are your thoughts? And kind of go from there. With my background in automotive, I've got kind of a little different insight as far as that's concerned. I'm not in automotive anymore. That's kind of why I wanted to try Turo. It's kind of revisiting a few things and just having a little fun with it because I like playing with cars and putting it out there. And, it gives me an opportunity to try a vehicle that I probably wouldn't own long term. Right. So I can say, okay, I'm going to have that vehicle for 6 months or a year. And then, like, good example, I've got the Outlander, which I work for Mitsubishi. I like the Outlander. I've always wanted to have one for a little bit. So managed to come across one, and now I'm going to run it for a year. And maybe I'll do that for 9 months. And the next thing on the to-do list might be a Land Rover because I haven't had a Land Rover in the past. So I'll probably take whatever I've made off the Outlander and roll that into the purchase of something else, whether that's that or not. But it's just kind of the idea to be able to play with it a little bit. Whereas your approach might be maybe you need to get the car to cover some bills. Or maybe you need to get the car to cover the payment, which again, a lot of folks on Turo seem to be doing okay with that, depending on their marketplace. But just be aware that there are different forms of finance contracts out there. There are different sources for them as well. And to shop out there is really important. And to go in knowing what your credit rating is. Go in knowing the budget you can afford, even if you didn't have Turo rentals. You don't want to get in a bind from that standpoint. So that's kind of the overview of kind of what's available out there. There are some other ones that are kind of kicking around too. So if you've been in Turo for a few years and you're going, oh, I would really like to graduate and move up into more cars, or maybe you want to go with that 90%, so you get a full payment from Turo. They basically take 10%. So you're going to want to look at getting into a commercial policy. Now, a commercial lender is a little bit different. So they may look at it from a standpoint of giving what's called a floor plan. So in other words, they're going to say, hey, look, this is $80,000 or this is $100,000. It's to float your inventory. That's all it's to do. It's not to pay for an office or space or furniture. It's literally money that's going to go directly to a car, and they're going to pay a dealer. And usually they're pretty insistent on their sources. So you might be able to get it from an auction, or you might be able to get that vehicle from a local dealer or from a franchise shop. They're going to be really leery cutting a check to a personal car. They want to be able to kind of track the history on it and have the comfort and just the reassurance that, again, that Omvec would provide in the event that there was an issue. They're just trying to protect themselves from that standpoint. Now, because it's a dollar value that they float out there, they're holding the vehicles as collateral. So they're expecting you to pay the depreciation along with the interest or the carrying charge on a floor plan. And that gets to be subjective to a certain amount. And that's where market trends can change dramatically, where you might have a BMW 3 Series and you go, this is great. I love it. This is wonderful. Well, your lender may come back and say, hey, that vehicle is now just dropped exponentially. We need 5% paid out by the end of the month. And get almost like a margin call on these things. They're usually pretty reasonable. Like they'll float around a little bit. But if you're in some weird exotic stuff that you bought and the market has dropped completely, they're going to start asking for some money. Like just be aware of that. So floating a floor plan can be problematic. Now, if you look at car franchises, they use floor plans all the time. So do rental agencies, but they're usually doing bread and butter, pretty easy vehicles to predict where they're going. They're buying like a Kia Soul, right? And they go, okay, well, we pay 21 for it. It's a year old. Next year it'll be worth 18. Might be worth 16. But there's an easy charge to go with on that particular purchase that most floor plan lenders will acknowledge and say, okay, we're pretty safe on that one, right? So again, you have to kind of work with them a little bit, and they're usually pretty reasonable from that standpoint. The other one is to go and get a actual business loan, which is actually not a bad idea. So if you're going to float 4 vehicles, it's a good idea to go in and talk to your local BMO, go to a commercial bank and say, this is what I'm working on. I'm at that point where you've already run Turo for maybe 2 or 3 years. You already have the hoops in place. You've already worked out, how does an insurance claim work out? How does this go? And so forth, right? So it's one of those things where going in and saying, today, I need to do that, probably not going to fly. But if you said, hey, look, here's my books for the last 3 years. I want to move up a notch or two, and I want to have a business rate. That's probably not a bad idea to go with. But right out the gate, they're kind of out of the picture altogether. So hopefully that kind of helps you out a little bit as far as the layman's babble on finance, as far as that's concerned. Those are kind of the basics as far as what I've kind of experienced with financing. Again, getting a traditional car loan through a dealer or through your bank is probably the best way to go if you're going to do it at all. Getting a subfinance lender is going to be a bit of a struggle, and it's going to be an issue where you're going to be controlled on what the value of the car is as well as what your payments are, and you're going to be locked into that long term. Not ideal, but again, it might be your only way to kind of get in and get credit rolling. So it's one of those things where just eyes wide open. Don't go in and buy the $180,000 whatever, on a pay here, buy here program. Something to avoid. Leasing, not a bad idea, but again, you're chasing that depreciation rate when you're talking on Turo. So it's one of those things where I would probably avoid a lease because you're going to get hit at the end with a surcharge for extended kilometers or wear and tear. Plus, you're going to have an issue on all these loans as far as what they allow. So it's one of those things where you want to be able to go over those hurdles relatively quickly and say, look, this is the intent. And just be upfront. So at least you're not chasing your tail down the road and saying, oh my God, got into an accident. Now there's a claim on the car. They're fighting over who gets paid, right? And whether or not it gets paid to the lender or to you, and nothing's been disclosed. You opened yourself up to a certain degree of liability when it comes to that. So again, leasing can be a real issue there if you're not dealing with it up front. Getting into a commercial lender or going line of credits, probably the ideal thing to do, but it takes time and energy and experience to be able to go. It's one of those things where traditionally, at least what I found, a dealer plan, they would usually approach you. So it's one of those things where at some point you bought enough cars through an auction or through a dealer where they're going to go, well, hold on, we keep putting this vehicle name registry through on some of our cars, like on some of the cars they own. They go, well, hold on a second, this guy's clearly and then usually that becomes a relationship builder from that standpoint. And they'll usually reach out to you. Again, it doesn't hurt to go and contact them and say, hey, this is where I'm at. You might find someone really receptive and say, you know what, we'd love to do that with you. And they may even give you a line of cars and say, hey, look, these are some of the vehicles that have come back from our current pool of vehicles. Maybe they'll dip into that for you. And I've experienced that in the past where I've had a small little car lot where the folks that I had a floor plan with held a plan with 3 or 4 other dealers as well. And what would happen is you get a dealer that would get upside down and their inventory would become available. and they would tailor it. So it was not that they were forcing it down and saying, "Hey, you got to pay this for it." It'd be one of those things where there'd be a competitive number attached to it, and the way that they would kind of rotate out their vehicles, and sometimes they would network and say, "Hey, you know what? We've got that blended into the system. We can put it in, and if Ted in the other town needs this." Sometimes they'll bounce back and forth, which is a kind of old school way of doing things, but some of them do work that way. So again, commercial stuff is not a bad option. Canada, you're a little bit limited. It's a little more common in the States to go that route, but it's one of those things that you might want to review. And that's just the overcap on everything. So hopefully that helps you out a little bit. If you've got particular questions, again, I do apologize. Like, this is essentially a webcam. I'm not editing. There's no script attached to it. It's just kind of a free-for-all babble about things that have just come up or questions that have kind of been posed as far as that's concerned. So again, hopefully it kind of puts you in a direction to say, okay, well, here are some of the options. And again, if you've got a deal out there, you're kind of saying to yourself, I'm working something, and you'd like to get my opinion of it, just send me off a chat and say, hey, Keith, this is what I'm at. Um, you never know. Life is strange where you kind of go, okay, well, for a good example would be if you were at a Hyundai dealership, I would really recommend getting a gap policy because they have it through their lender and it's very reasonable. I know Mitsubishi offers one as well. It's a little more money, but it's one of those things where kind of subject to the deal and what you're buying, to be able to say to yourself, 6 months out, car gets written off. You don't plan for that. But then you have negative equity on a new car, a fair bit. At least that gap policy covers that loss, or at least mitigates it a little bit, so it doesn't hurt quite as much, or it gives you a little bit of a timeline to be able to resolve the outstanding debt. So again, something to think about from that standpoint. We're coming up past 30 minutes. I try to keep these around 30 minutes. If you like the video, thumbs up would be great. That's always wonderful from that standpoint. The other one would be to subscribe. Again, I'm putting together a podcast, again, a little more well organized and a little slicker than this. That'll be about Turo. So again, and also automotive as far as that's concerned. I think it's one of those things where I've tried to narrow it down to my Turo experience as far as what's been happening. But again, it'll probably cover a few other topics from there. So again, enjoy your day. Have a pleasant and enjoyable YouTube experience. End the stream now. Oh, not yet. See ya.